Darkness, my old friend, I've come to talk with you again, because a vision softly creeping left its seeds while I was.
You simply don't have the knowledge and experience to be able to do that. So your plan is going to be a malleable, flexible experience, really forever. But that first year is where you will make the most progress in your trading plan. And the hardest part about improving your trading plan, which we'll get to as the last phase, is being honest with yourself. You're going to come into this business with preconceived notions, not only about the business, but about yourself. Right? You're going to come into this business. I always use this analogy, so maybe you've heard it before. You might feel like you're a very patient person, a calm person in, quote, the real world, outside of the trading game. Yeah, okay. Maybe amongst your friends, you're good. But in the real world, generally speaking, you're not that good. Well, in your mind, you're really good. But when you measure those results, that will tell you if you're actually good. And this is the single hardest part for people. Things have to happen. You need to be better, and your plan needs to make some adjustments to help you be better. So money management, protect your account first. This means don't risk lots of money when you're new. $5 a trade, $10 a trade, nothing more. I don't care if you're Warren Buffett, Jeff Bezos, Bill Gates, whomever you are. I tell them the same thing, because you're going to likely lose your first 6 months, first 12 months. You want to lose less while you're learning. It's your number one job. We never, ever, not ever take a trade, okay, without these three things: entry, stop, and target. If you're taking a trade without any one of those things, you're gambling. You're not trading, you're gambling. You want to know why most people think traders are gamblers? It's because most traders are gamblers, right? If you watch the average trader trade, might as well just put them at the blackjack table in Vegas, because that's what they look like. Because they don't have an entry, stop, and a target, or a trading plan, which we're discussing today. This is why you have a stop loss. You see this right here? It's a beautiful 3-bar play. Wide bar, narrow bar, rip. Oh, no rip, right? Wide bar, I always say wide bar, narrow bar, rip. It's not wide bar, narrow bar, rip. It's wide bar, narrow bar, holy shit. Okay? Wide bar on the downside, couple small bars, and then get crushed. You're in this at $48, and now it's at $40. Okay? Your stop loss on this was about 30, 40 cents, but it's down $8. So what's that? 20, 30, 40, $8 divided, was a 20 to 1 loss? Reminder before we start building the plan, this was a short trade, not a long trade. Some of you go, wow, what a nice play. It wasn't a long trade. It was a short play. Under 73.80 was a base breakdown that dropped about 10 cents. And then, well, let's just say it went the other direction. You take your stop loss, you lose your whatever your risk is, $100, $200, $500, you lose it and you move on. But if you hold on, you're going to be drinking the hopium, because there's nothing else you could do at that point, right? Just a friendly reminder. What am I going to focus on? Now, hear me out on this. This is important. Are you going to be a scalp trader where you're going to trade an hour a day and focus on 2-minute, 5-minute charts? Are you going to be a core trader where you're focusing on weekly and monthly charts and you're holding stocks for a month, 2 months, 3 months at a time? Are you going to be a swing trader where you're focusing on 60-minute and daily charts, occasionally a weekly? Okay. You have to decide what style you feel fits your personality and your time constraints and your financial constraints. That's a slide in professional trading strategies that I didn't put in here. Right? Think about your time constraints. Can you trade the market open? All right. If so, all right, what are your personality traits? Are you a jittery person? If so, you might want to start with a 2-minute chart. If you're a more patient person, maybe you can intraday trade with a 15-minute chart. But you need to think about those things I talked about. Your personality traits, your time constraints, heck, even your financial constraints. Some people that are US-based traders don't have 25 grand. And that means they can only take 3 trades a week. Well, if that's the case, you're probably going to be a swing trader, all right? Unless you're trading with a prop firm or an offshore brokerage. If you're an international person, none of this matters. You can do it. Ice on my neck, doesn't come in. I'm a pretty boy, I'm stunning.
super speed Sonic, I'm running. Super.
I will only trade from 9:30 to 10:30 a.m. I will not trade after 10:30 unless I'm in a position. I'll manage it out, but I will not take. Thanks, Jenna. But I will not take a new trade after 10:30. I'm not saying this is a rule. I'm just using an example. I will trade 9:30 to 10:30. I will only allow myself 4 trades per day, no matter what. Okay. Of those trades, the patterns I'm going to trade will be, for example, the 3-bar play and a buy setup. So now we've chosen the time parameters in which you're going to trade, 9:30 to 10 o'clock. We've chosen how many trades you're allowed to take, 4. We've defined the pattern you're going to take, 3-bar play and buy setups. Next level, what defines a 3-bar play? Well, this is what defines a 3-bar play, right? Wide bar, narrow bar, breakout. But that's not that simple. What does the wide bar igniting bar actually mean? A wide range igniting bar actually mean? First or second bar of a move. Let's look to the one on the right hand side here. We're breaking below double bottom support, okay? It's the widest bar you've seen on the entire chart, so it qualifies as a wide range bar. It's below support, okay, that's good. And it has what below? Void below. That's good, but that's only the first bar. All right? Now the second bar has to be what? A narrow range resting bar that cannot penetrate the low of bar number 1. It has to be a narrow range resting bar. I don't care what the color of the bar is. It could be red in this case. It could be green in this case. It could have a topping tail. It could have a bottom. I don't care. But it has to be in the lower 30%, lower 50% of bar number 1. This qualifies. Entry will be on the 3rd bar in this case. Stop will be above bar number 2's high. You have to define these things very specifically. Very specifically. Otherwise, you will start taking garbage. And here's the best way you can do it. Don't just define them on paper. Define them on paper and then put a picture of it in your trading plan. I'll repeat. Define them on paper. Specific criteria that you must have before you take the trade. And then put a picture of it. You know why? Because a picture is worth 1,000 words. And I tell this to you guys every day in the room. Don't take the trade unless the picture in your plan or the picture on your wall looks exactly like what you're about to trade. Most people don't do this. How do I know this? Because I get some crazy questions in here. Most of you are too lazy to find them, or you're that FOMO. Oh, it's dangerous. Fear of missing out. I got to take it. I got to take it. No, you don't. There will be another one that looks just like it. Okay? There will be another one that looks just like it in 5 minutes, 10 minutes, tomorrow, the next day, next week. It doesn't matter. Make sure the picture on your wall matches the picture on your screen. It's real money, guys. Okay? Liquidity. Have volume requirements for your trades. I won't take a trade that's going to do less than 1 million shares a day. And you break it down. Say, okay, by 9:35 a.m. I'd like to see 200,000 shares. By 10 a.m. I'd like to see 500,000 shares. All right? By 10:30 I'd like to see 700,000. Break it down. And that means you can't take it unless it has that amount of volume. Spread. You might say, here's a rule I have in my trading plan. I cannot take a trade in which the spread is more than 35% of the size of the stop loss. What if my entry is $167, hypothetical, and my stop is $166? That's a $1 stop loss. $1 stop loss. That means the spread on that trade cannot be bigger than 35 cents. And that's a lot. I don't like taking those. But the spread cannot be bigger than 35 cents, or else it's too spready and I will not take the trade. And preferably, I don't even want it that spready. You have to track your trades. I'm going to show you this in just a second, okay? Journal your trades and track your trades, okay? Because that goes back to How are you going to actually measure this if you don't track them? Why do professional football teams have so many people on their analytics staff? Why does baseball use sabermetrics now, whether you like it or not? Why? Because it's proven that it works. Well, if you're not measuring anything, how can you assess it? You can't just say win or loser. You need to assess it, and you need to measure those things within the confines of when you took the trade, the market environment in which you took the trade. Okay? Did you take the trade at 1 p.m. or 10 a.m.? And you might find trades don't work as well at 1 p.m. as they do at 10 a.m. So what do? Stop trading at 1 p.m. That would be one example. You see a pattern of yourself doing stupid things after losses. It will help you become more mindful of that scenario when it happens. So let's say you took a good trade and it didn't work. Now you know you're more susceptible to being stupid. Your emotional state of mind is not as clear because the first trade loss has messed with your mental game. So now, if you're mindful, you're more aware of this and you're less likely to do it again. 60-minute chart or the daily chart before we take an intraday trade on a 2-minute or a 5-minute. We always look at the 60 and the daily. So what do you want to do? In your journaling, you want to put on the daily chart of the stock you traded, inlay it over top of the time frame you took. In this case, it's a 5-minute chart. So you took a 5-minute trade, inlay the daily chart. I want to know what the daily looks like. And if you have space, inlay the market on a 5-minute, like the Qs or the SPY. I want to know, was the market going against me? Was the market helping? Was the market hurting me? Those three things are important. A trade tracking spreadsheet. A more detailed look inside what we did. 1 trading day, 11 trades, 9 wins, 2 losses. This is the total amount the winners made. The average winner's right there. The best winner was right there. This is the total amount of the losses, the average loss and the worst loss. So it tells you all in all, gross profit was $10,453. Average gross profit was $950. This means all trades. If you took all trades, winners and losers, you made $950 for every time you push the button. So that confuses some of you. That means every time on every one of those 11 trades, we made $950. Even though we lost on some of them, you took the winners and the losers put together, you made $950 every trade. Batting average 82%, sharp ratio. Now let's go deeper. How do we do on longs versus shorts? Well, we took 10 longs and 1 short. Okay? We had an 80% batting average on the longs, 100% batting average on the shorts. Now, guys, this is one day on 11 trades. Imagine how useful this information becomes when you have 1,000 trades. And what if you find that your batting average on short trades is 24% and your batting average on long trades is 64%? Well, in and of itself, that might be very significant. We'd have to take a look at the market environment. But if the market environment during that time was flat or mediocre, you have to figure out why you don't do well on short trades. What are we doing? We're refining our trading. We're getting better. We're trying to maximize our strengths and minimize our weakness. You might come to a point where you say, I'm just not very good at short trades. I'm going to eliminate all short trades from my plan. I'm not saying you should. I'm just saying that that might be your hypothesis when you're done. Time frame, 1 minute, 2 minute, 5, 15, 16. So notice, 2 of those 11 trades were on 1-minute charts. 8 of them were on 2-minute charts. 1 of them was a 5-minute, and it has the same information. Batting average. Start with 2 patterns, and when you become outstanding at those, you can add to your toolbox. Okay? You know, you learn how to change the oil on a car before you learn how to rip the engine apart. One more slide after this. Psychology, guys, is 99% of success in this business. If you can't manage yourself, you'll never succeed. I'll repeat it. If you can't manage yourself, you'll never succeed. All right? Day job. Statistically speaking, guys, less than 8% of people in the United States of America make $100,000 per year or more. Household income, it's more than 8, but individually, about 8% of people in this country make 8%. Trading numbers are even lower. What's the point in saying all this? That's people with college degrees and training from high-level businesses, and still 92% don't get there. Wow. What does this mean? You're not different. Assuming so is very dangerous. Give yourself the proper time it takes to succeed. All right? Compared to other businesses, guys, the startup costs in this business are cheap, man. They really are cheap. Go try to open up a Chick-fil-A or a McDonald's or a Subway. Go open up a construction business.
Break a mirror, roll the dice, run with scissors through a chip and firefight. Go into business with a grizzly bear, but just don't sit down, 'cause I've moved your chair. Break a mirror, roll the dice, run with scissors through a chip and firefight. Go into business with a grizzly bear, but just don't sit down, 'cause I've moved your chair. Break a mirror, roll the dice, run with scissors through a chip and firefight. Go into business with a grizzly bear, but just don't sit down, 'cause I've moved your chair. Break a mirror, roll the dice, run with scissors through a chip and firefight. Go.
I'm here to collect Mr. Shelby's horse. I'm a little early, I think.
Are you going to train the horse to race?
Yes.
Don't use her, Croc. She's very gentle.
I won't.
No.
How is Mr. Shelby?
Well, now he's got the Americans after him. He's a bit hard on people.
The Americans?
Yeah, they call them the Mafia.
Dear God.
Yeah, there's 15 of them. Yeah, they want to kill us all. But we got guns and grenades and police bags, so it's going to be okay. Yeah. I'll get the horse.
There's a supply from Coventry at 10. The convener of the Boilermakers Union at 11 in the Chamber of Commerce. But that isn't the thing.
Right. Close place here in this car back in it on the street. We'll open a bell.
Right?
Yeah, and a bell.
Mr. Shelby, this place is about to explode.
We'll open a bell, Devlin. Follow it this way.
Yes, Mr. Shelby. Oh, by the way, the revolution's scheduled to begin at noon.
Oh, yes. Hello, Mills. Former heavyweight champion. Staffordshire, Warwickshire, Worcestershire.